What you're about to see is a conversation with myself and Tyler Oakland, a very prolific retail investor for Opendoor who also co-founds a company called Datadoor.io that brings on analytics and data for iBuying companies just like Opendoor. With conversations like this with Tyler Oakland, I can learn a lot very quickly. I hope you guys enjoy this, as he was a very smart person to talk to, and hopefully we'll be on the show again. Tyler Oakland, thank you so much for coming on the show. Really do appreciate you joining me. I'm here to learn more about Opendoor. Tyler might be one of the largest names in the space about talking about Opendoor because he is a co-founder, am I correct, of
Co-founder.
Datadoor.io. Tyler, why has this stock run up so much year to date? I think almost like 300 plus percent.
Yeah, I mean, I think an important caveat to that story is all-time Opendoor is still down over 50% from its
Mhm.
all-time highs.
Yeah.
But it's been a great year for the company, one of the best performing companies in the growth tech space for sure. I think what people are starting to see and what the data has shown is that margins and profitability really bottomed out in November of last year. And since
Yeah.
then, it's just been a steady, gradual trajectory upward for the company.
So, I don't know what you guys are seeing in the data right now. The market has been recovering a bit because obviously, at least the way that I understood it, is that they were getting or houses at very expensive values, and now as they're starting to buy these new houses, and what they're saying is their new current cohort of houses is they're getting them for much better spreads and at much lower values. Is the home price appreciation still coming up in this market going forward? Like what are they outlooking for the rest of the year?
Yeah, I think it's been a new company since Eric Wu, the original founder and
Right.
CEO of Opendoor. He stepped down to be president of Marketplace, and their CFO Kerry Wheeler took the reins as CEO. And it's really been a new company in regards to positioning, conservatism, that axis, particularly over this past year. And so what I mean by that is the company has really low volumes since that post Q2 offer cohort, and so they've purchased fewer homes, they've sold fewer homes, and it's not just a choice that they said, "Oh, we're going to buy fewer homes." What they did was they increased the spread on their purchase offers.
Right.
So they said to a customer, "Normally, we're going to offer you exactly what it's worth in the market if you sold it today." But because we want to be a little bit more conservatively positioned, we want to get out of this hole. We're going to offer you 5% less than it's worth, right? So that we can get our 5% fee, 5% less. We'll sell it for what it's worth. We'll make a 10% profit or gross margin profit. And so that's kind of the playbook that Opendoor has been operating on throughout 2023. And as you can imagine, conversion for those purchase offers has declined as well. It went from 35% to about 10 to 15%. And so
Mm.
volumes have been down. Although what we're seeing in the data is that volumes are starting to pick back up again.
Okay. And so what markets do they really are they really taking over right now? From what I saw from previous quarters is that they're really based out in two different markets, Phoenix and Atlanta. Is that still the case, that that's, the bulk share of their of the houses that they're purchasing?
Yeah, so I can give you the exact number. In Q2, which they're going to report on in a couple weeks now. In Q2, Phoenix and Atlanta constitute uh, 25% of their total sales. Other big markets for them are Tampa, Florida, Dallas, Fort Worth, Houston, Texas, Charlotte, North Carolina, and Jacksonville, Florida. So really, like the Sun Belt states. So Florida, Texas, Georgia, North Carolina, Arizona, all of those are really big for Opendoor.
But that sounds more diverse than what it was like last year. From what I heard, it was like 30 plus percent for Atlanta and Phoenix, in prior years. So are like, because obviously I know that they went from whenever they first IPO'd, I think it was 22 markets, 27 markets between there, to now 50 plus. Um, I assume they're seeing good traction in all markets, or how does that really work? Are they really getting like, because let me go back to essentially what this company is. So they're trying to make AI algorithms. Tell me if I'm wrong. To assess houses and then make offers on those homes to purchase them, you know, and then find buyers for those homes at a different spread for what they originally purchased it for. Is that essentially what it is?
Yeah, yeah. I mean, I think there's two core pieces to the business. One is their AVM, or their automated valuation model, which is what you're talking about. That's
Yeah.
like
Okay.
the secret sauce, all the machine learning that goes into being able to predict off the cuff with a small amount of information how much a home would be worth right now and what the risk in reselling that home is, right? How long it would take. All of those are being computed very quickly so that Opendoor can make an offer when someone says, "This is my
Right.
address. This is a video of my home. What will you give it for me?" And Opendoor will do that that day, right? But the other piece to that puzzle is the operations, right? Like the capital stack, financing those homes, owning the homes,
Yeah. Yeah.
reselling the homes, right? And so those are the two big pieces to the Opendoor puzzle.
So for that first piece, um, have you guys seen, or has management actually been talking about how their algorithms have been improving? Like how over this large shift has the algorithm sort of held up whenever they're making these fast transactions?
Yeah, so there's a lot. I'm sure, as you can imagine, and just to give a little color, right? Opendoor was doing great up until the summer of 2022, when successive interest rate hikes happened and demand for the market just bottomed out. And
Right.
so Opendoor was, had been buying thousands and thousands more homes than they ever had up until that point, and the algorithm was working at that time. But when demand bottomed out, so did the price. And so Opendoor had to sell a lot of those homes, the Q2 offer cohort, which we'll refer to that way. Uh, it lost a lot of money on those homes. And you think about what went wrong, if it's such a uh, tech talented company, if they have such a great AVM industry standard.
Yeah.
And the issue is really simple. They just didn't value or use rate hikes as enough of a variable in their decision making process. Because you go back in the earnings statements, and they said, we expect that the second half of this year there's going to be home price decline. And if it was a standard home price decline, if there were fewer rate hikes, they would have been just fine. But because they were stuck holding inventory that suddenly, was worth 10% less, like over the period of a month was worth 10% less, they were in a much bigger pickle. And so I think that's what's changed, is they've been much more conservative on the positioning, much wider spreads, and you can bet that they're no longer taking for granted mortgage rate and rate hikes, general Fed
Sure.
rate hikes.
Sure. So that's something that I really was interested in learning from you specifically. Is like, from what I heard, the two main ways that they were at least making a lot of money on these homes was through spread and home price appreciation. And that whenever home price appreciation isn't there, that they're going to lean on those spreads. And then to add to that, then they got into a partnership with Zillow where they could be very choosy about which houses they wanted to purchase and or not, or put an offer in. So I was curious, how have the spreads been doing since that time? Like, are people actually selling to Zillow at much higher spreads in Zillow's favor, or sorry, in Open Door's favor?
Yeah. So a couple parts of that question. I would say the two big advantages of partnering with Zillow and partnering with Redfin, which they've been a partner with Redfin for years now,
Yeah.
is one, that they can offer higher spreads and keep conversion volume, absolute conversion, the same, because you're dealing with a much wider funnel of customers, right? If you're offering, on a home 90 cents on the dollar, and you're only getting 10% of people convert as Opendoor, right? But then you suddenly increase your funnel to Zillow, which has 200 million plus customers a month. Now suddenly, even though you only have 10% conversion, you're getting a lot more offers converted. And
Right.
so your business can operate at a higher scale. I think the other piece is what you touched on, which is that Opendoor can also be more choosy. They can choose, because a part of that AVM is not just what the home is valued, and I touched on this, but it's the risk associated with the house, the risk associated with their ability to price and resell that house. And so that goes into the spread as well. It's not just like, I want 500 basis points of extra margin. It's, I want 500 basis points of extra margin, and I need maybe 150 basis points because this home has an unfinished basement, or it's in a neighborhood that maybe isn't as good, and so I'm not sure I'm going to be able to sell it as quickly. All of those little factors are going into this offer, but the relationship with Zillow is letting Opendoor have much safer underwriting standards, if you will.
Sure, sure. Um, so going off, I have so many other questions I wanted to ask, like, how and why Zillow partnered with Opendoor instead of, or well, I know they attempted iBuying, but they failed at it. So, but before we get into that, I'd also like to know, because we're just touching on their sort of revenue breakdown, is what also goes into their extra products that they're offering. Like I was looking into a little bit of what Opendoor exclusives is, or Opendoor Max, and other ancillary products. Can you give me any insight on what those products are, and other ways that they're looking to make money?
Yeah, so Opendoor Max was a product that Opendoor created that was basically having you be able to check home prices, your home price, or your dream home, or a neighborhood of homes, and the price would change in real time, and it looked like Robinhood. So it was
Mm.
it was like a very sleek, easy way using Opendoor's algorithm of determining in real time the value of a home. That product has been shuttered by Opendoor,
Oh,
and so they're not currently working on it right now. Opendoor exclusives is a much more. It has legs, right? It's more of a product of longevity. It's one of the final iterations of the company. It's very important to Opendoor becoming the company that they want to be.
right.
And so what that is exclusives is this way of the company improving the buy side and the sell side of the equation. And so they initially came out with exclusives, and the idea was is that you'd be able to uh, sell your home much more easily, right? And so we can get into that as well. But the long term destination of exclusives is that it becomes this marketplace, and so you will be able to, without having to call up a realtor or put your home on Zillow, you'd be able to go to Opendoor, submit your address, and Opendoor would go out to all of its partners, its institutional investors, its REITs, other people,
Right.
just regular people, and say, "This is a home that's for sale. What would you offer for it right now?" And so Opendoor collects all those offers and it brings it to the customer, and the customer can accept or deny, obviously. And all said and done, it costs the customer 3%. So as opposed to 6% that you'd normally pay as a homeowner, three to the buying agent, three to the selling agent, you pay 5% to Opendoor, and then they give you 200 basis points reimbursed. So net 3%.
Yeah, like I'm going through the house buying process right now. Actually just finished. I'll be moving in, you know, in late August. Um, and I think from what I heard that the actual seller is going to net 5% off of what we actually paid. And knowing that Opendoor, I'm up in Canada, so there's no Opendoor here. Potentially, have they ever said anything about that? By the way, any international expansion yet, or still going to try to break out into the markets that they're like more into America?
We thought that they were going to, but it turns out they were just hiring in Canada. They were trying to take advantage of the tech talent over there.
Sure.
Um, I, I think one of the biggest obstacles to international expansion is actually the amount of commission. America has, record high levels of commission that goes to real estate agents on both sides of the transaction, and that's just not the case in most countries. I don't know what it is in Canada,
Yeah,
but maybe you do.
it's like 5%. I think it's 2.5 per, buying agent, selling
Yeah.
agent, but 6%
So
is
maybe,
is crazy.
yeah, yeah.
um, but yeah, so um, yeah, 3%. I mean, that's much better. So, any other products? Because I know that you were also talking about, the potential of going to a customer that they've already acquired and saying, "Hey, now that we've sold you this house, like we can offer you upgrades to increase the value of this home potentially." Um, and then maybe they'll even buy it back from you again.
Yeah, yeah. I think so. There was this golden period for most of tech where it was more about the vision and the opportunity than it was about necessarily the fundamentals. It was more of a
Sure.
growth at all cost stage, and Open Door was no exception to that. And there were there were a lot more opportunities. I think a lot more invested as in startups within the Opendoor startup at those times. And I think since Carrie took the helm and has been operating as a more lean, mean profit machine,
Back to
they have
basics.
not. Yeah, back to basics. So like, let's make our first party transaction work, and we need to generate a profit with that before we try to go out into these. Like, we can't depend on these ancillary services for profit. It just won't work. But to answer your question, I think renovations, so renovations for both homeowners and people who are actively shopping for homes, I think is a product that will be available for customers, which could be interesting, right? We just bought a house, and we had to replace all the hardwood on the main level. We had to repaint the entire house, and we had to carpet the upstairs and the basement. It would have been so great if all of this could have been handled by someone else before we moved into the house, as part of the agreement, a part of the arrangement. And then, potentially some of that cost could be layered into the mortgage or the financing, which creates a much better experience, right? That's all out of pocket for me and my wife. And so not as great of an experience, definitely, as the customer of what is traditional home buying experience.
So, and did you end up buying your? It doesn't sound like it, but you didn't end up buying your house through Open Door or anything like this.
So that's the thing is, Opendoor has solved very clearly. They achieved product market fit for selling your home, right? And I've said this before. I think I tweeted this the other day. Selling is finance, right? It's about convenience. It's about how much money you get. That's it, right? Like, when you're selling something, you don't really care who you're selling to. You're just trying to get the most return on whatever it is that you're offloading. And Opendoor did that with a product, right? Being able to just click a button and you get your home's value wired to your bank account. You don't have to talk to anyone else. It just happens. I mean, that's like a magic experience.
Yeah.
What Opendoor has not conquered, and what they're trying to build with their marketplace and with Opendoor exclusives first party, is to optimize for the buying experience. And that's much more complicated. Selling is finance, buying is romance. You have
Yeah.
to
Sure.
woo someone, right? Like that's what Zillow did, is they perfected this art of daydreaming for your next home, right? Of finding your dream home. And so there has to be some elements of discovery, of romance, of risk, fire, emotion, passion, whatever it is. It's much harder to capture that than it is to capture the sell side of the equation. And so when I'm buying a house, there's not really a big value proposition. Opendoor exclusives first party is not active in Denver, Colorado. And there really aren't many homes for sale by Opendoor in Denver, Colorado, certainly not in my neighborhood. And the other part of it is I don't have to pay any commissions to realtors, right?
Yeah.
And so my wife's uncle is a realtor. We were like, this just makes sense. I think we'll work with him. And he was great. It was a much better experience working with him than I imagined working without him would have been. But yeah, the irony is not lost on me that I didn't use Opendoor.
No, I mean, hey, I mean, I'm a big SoFi guy, and a lot of people that invest in SoFi don't even use SoFi for a lot of the things, because maybe in a particular area they're not best, for example. But that being said, I didn't even factor in the idea that Opendoor is potentially not that great on the buying side. So how do they offload most of these homes? Are they actually, because now that I'm thinking about it, it could be also not even retail consumers that are buying the homes off of Opendoor. Like, do they sell a lot to just REITs and you know other big funds, or how do they offload a lot of the homes that they're taking on?
Yeah, the majority of the homes that Opendoor sells still sell to individual customers, the vast majority. And
Okay.
particularly since the summer of 2022, there was a lot of drying up of institutional buying homes. But yeah, Opendoor at most will sell 15 to 20% to institutions, but it's been much lower over the past few quarters, just because of institutional buying behavior. But I mean, if you think about it as a customer, you might not even know that you're buying from Opendoor. You're not going through an app necessarily to buy from Opendoor because they listed on the MLS. They represent,
Sure.
the seller who is them in the process. And so you're touring a home and it's owned by Opendoor. It's kind of like no
I see.
different
Yeah.
from the consumer experience.
Gotcha. But if it was to be purchased off of their app or something like this, if they can make that relationship, the take rate would be much higher, I assume.
Yeah. So buy with Opendoor is that product basically.
Okay.
And the premise there is it's an Opendoor owned home. You're not using a realtor, or you have decided with your realtor that they're going to be getting a reduced commission. So yeah, that is a product that Opendoor has. But again, it's tough for customers to know about this product, right? Like home buying and selling homes is already this black box, this sort of confusing Byzantine many-step process. And so you start to throw in these new products, which sound great, right? And they're really cool for consumers. And tons of prop tech startups have different products like that in the space. But it requires all of this education just for the consumer to find you and to think that it might be the right choice. Not to mention the fact that you're meeting these people once every 9 years that they're buying and selling a home. So it's a tough space to really navigate, particularly for the buy side.
Right, right. And then another thing that I look for whenever I'm trying to invest is like just satisfaction of the customer. Um, what are people's experience whenever they do go through Open Door? What are the NPS scores like, or what, any other customer satisfaction ratings? And then that being said, if they are good, which I'm going to assume they are before you even say that, um, are there reoccurring customers that potentially sell multiple times through Open Door? Is that something that they've seen?
Yeah. Yeah. So I'll answer the easier part of the question first. Yes, there have been multiple customers, or recurring customers, return customers, and certainly on the institutional side, right? Many
Okay.
institutions buy um, over and over again from Opendoor in the order of hundreds, thousands of homes. So that's something for sure. Over the how many years is it now? It's 9 years of Opendoor's life cycle, 8 or 9. There's definitely been some recurring customers. I will say, the Opendoor when they IPO'd in their 2021, that range, their NPS was 85, which is about as good as it gets.
Yep.
It doesn't get much better than that. And then since they began widening spreads, so they're offering consumers less than the home is worth, their NPS has dropped to 75, which is still fantastic,
Yep.
especially if you're paying 90 cents in the dollar for the home. I mean, that's pretty good, right? I mean, it means that even though the axis that we're worried about is finance, is getting the most money possible, that convenience element has been so valuable as perceived by the customer that their NPS is still 75.
So in the market that I'm in, I'm very close to like I'm very close to Toronto, Canada. Just bought a house outside of that big city. Um, there's still houses even to this day that are getting 16 offers, and the top five are all cash and no no conditions. Very very hot. I can't imagine myself seeing Open Door in this market where they're offering a customer under market value or something like this. Like, how are they taking that deal from Open Door when, like, is there really no other offers that potentially would beat out Open Door in that situation?
Well, so the dynamics change depending on the market, right? I think
Sure.
this is something that I think is important and people gloss over, because a lot of people who think that Opendoor has already failed have said Opendoor didn't even make a profit when HPA was crazy. Homes were appreciating at 1 to 2% per month. The housing market was super super hot, like you're talking about. But to your point, Opendoor's value proposition doesn't really make sense in that market. And that's what we
Right.
saw during that market is Opendoor was having to pay more. They were having to obviate the spread and just use HPA, right? So that's that lever that we're talking about. They're having to use competitive offers and offer convenience as well, and just do their fee, which is a little bit better than the realtor fees that the seller would pay, and then make it back up on the HPA.
Yeah, and I mean, if if you start getting into multiple markets, you can kind of be pretty choosy in which ones are kind of cooling down. But
Yeah.
like, I didn't know that, especially in their bigger markets like Atlanta and Phoenix, that you're finding a 10% spread or something like this, where houses are this cool. Like,
Yeah. Well, a part of the issue, and this is the second part of that answer, is that we're in this really strange time where uh, people still have to move, and so there's still demand to move and therefore buy and sell homes. Um, but there's not a lot of supply because people don't want to move out of their homes that have a 3% mortgage rate. They feel
Yeah.
like they've won the lottery. They don't think that the mortgage rate is ever going to be that low. They can pay their mortgage with T-bills. You know what I mean? So it's like,
Mhm.
why would I move and double my payment for half the home? It doesn't make sense. And so for Opendoor in this situation, it's kind of perfect. It's kind of the situation that I've always talked about in a down market, or a market where it's really hard to sell your home. Opendoor would do really well because that's their value proposition, is to help people sell their homes.
Yeah. No, I think it's and I think you've said this on one of your podcasts. This is a massive problem to be solved, and the person that can solve this problem, like that company's going to make a lot of money. Um, and so I'm very interested in this company because it does seem like one of those companies that if it can get into this niche, there's the total addressable market for real estate or things that they could get into is so big. And so I'm very, very interested. It's just a matter of I find houses to be so different per neighborhood, per design, per like there's a thousand moving pieces, if not more. And then putting that in on the back of potentially machine learning or something like this. Um, like, what do you think? How do you value that? And do you think that they're cracking the code? And what do you wish would change?
Yeah, I mean, I think I think what I am most bummed about for Opendoor is the behavior, the overbuying in the summer of 2022. And I think, at Datador, Sebastian and I were watching them continue to buy homes, more homes than they ever had. And we knew that it was taking longer to sell homes. We knew that sales price was coming down. We knew that demand was drying up. And so we're watching this happen in real time. It's like watching a car crash. And it's like,
Yeah.
why is this happening? Because all of the guidance was that they were going to slow down, but they had a prominent person in the C-suite who was kind of driving this and said, I really think we just need to capitalize on this and go all in. And it's a huge bummer. But to your original question, which is like, how do I value this? I think the switch for me is if Opendoor can create a profitable company at a $10 billion run rate, of selling homes, because that to me tells me that they have accomplished, or they have found a profitable business in the first party business. And like, investing in Opendoor is not about investing in the first party business, as great as it is. It's just not. Like, the value for Opendoor is investing in the company that can profitably buy and sell homes, and as a result, use that as leverage, use that scale as leverage to fill out every single piece of embedded real estate finance that can be found in this massive undisrupted space, fueled by this first party transaction system. And that's things that we talked about, like mortgage, title attach, home renovations, home warranty, home insurance, all of these pieces that currently belong to millions of different fragmented companies, and not dominated by one, but would be dominated by a company if they owned the transaction. If they were at the center of the transaction with the customer from the start, the customer felt trust, they're doing all the finances anyways, and Opendoor can just continue to cross-sell all these services. Very similar to SoFi, which is why I was originally so interested in SoFi as well.
Yeah, right. If and potentially Opendoor is in that same sort of field where if you can get a customer in for cheap on a checking account side, and then slowly start to offer them the personal loans and the things that actually pay well to the very select clients, right? You can be quite choosy, and then your profits and the actual risk on those loans are actually quite low because you get to control the speed and how fast you actually want to make that money. Opendoor is an extremely volatile stock. And if you're sick of that volatility, you may want to look into something like a government-backed treasury bills that could yield you up to 5.5% interest. That's much higher than the average high-yield savings account that is also not fixed. See, the government-backed treasury bills are a fixed rate. So even as rates start to decline, that rate that you're supposed to be getting will be locked in. Now, US treasury bills are nothing new, but they've always been extremely complicated. Either you need to go into the bank or go onto a government website that looks like it was designed before I was born. This is where Public comes in. Public just launched treasury accounts, a great way for you to get that 5.5% interest with the flexibility of a regular bank account on a brokerage app, which means Public has really made this a sort of have your cake and eat it too style of product. It's still government-backed treasury bills, so it's an extremely safe product, but Public has also made the ability to have no hold periods or no settlement delays, with also the ability to reinvest all of your yield back into new treasury bills so you don't have to worry about timing your investments. So you can now manage all of your treasuries along with all your stocks like Opendoor or ETFs, fine art, crypto, or collectibles, all on public.com. Go to public.com/future investing to get 5.5% back on your cash whenever investing in government-backed treasury bills. Or you can click through on the links down below, but back to the video. Yeah, very interesting company. I'm super excited for Opendoor's future. I've been following them on and off throughout 2022 just because I love a company that can take over a market like this. Now, they don't seem to be the only company that is an iBuyer or anything like that. So what does Opendoor do differently than potentially a OfferPad or some of the other players in the space that I know that you've been tracking?
Yeah. So the other major iBuyer besides Opendoor is definitely OfferPad. It's also publicly traded. I think they're very similar from an underwriting perspective, from style of business, et cetera. There are some fine distinctions between the two. One, OfferPad is much smaller. So OfferPad was started by a real estate agent who was working in Phoenix and met Opendoor CEO Eric Wu, who sat down to meet with him and told him about what he was doing. That's what spawned OfferPad.
Wow.
And so OfferPad operates in similar markets, fewer markets, and at a smaller scale than Opendoor. And I would say the types of homes that they're buying, they're more looking at homes that they can renovate. And so that's one big difference. The other big difference is they're more approaching it from real estate agent perspective rather than a tech perspective. So the massive investment that Opendoor makes on their AVM is not mirrored by OfferPad, even when you account for scale.
Right. You were saying that Opendoor is much larger. Like you're talking at a multiple of what? Like, is it 10 times larger? How much larger would you say Opendoor is?
I don't think it's 10 times. Off the top of my head, I would say it's probably about 5 times.
Wow.
But I'd have to double check what OfferPad's recent numbers are showing.
And then so I'm curious what your take is like on economies of scale here. Being the larger player, what kind of benefits does that grant Opendoor, or does that just make the system much harder?
Yeah, so I think biggest obvious benefit for Opendoor is brand awareness. If every third home on your street is being sold by Opendoor, you're probably going to interact with Opendoor if you're a home buyer. So that's probably the biggest piece. But the other part that I would say is that scale really plays into their marketplace ambitions. It's going to be really hard for Opendoor to have a marketplace of both buyers and sellers coming together in any market unless they have some sort of critical mass, right? Like that's a basic component of this happening, and why their marketplace ambitions are so difficult is because they're active in 52 markets. They're going to need marketplaces in 52 or 54 markets, whatever it is right now. And so I think that's what you have to think about. There are many markets that they're operating where they're buying and selling 20 to 50 homes a quarter. That's not going to cut it for a marketplace. Why would I go there, right? When you can just go on Zillow or MLS, it just won't be as clearly valuable.
Yeah, because that's also what I was thinking as well. Like, because I remember through 2022 that there was a boom in the amount of markets that they were opening up in, and I was thinking, what is this? Just so then they can get the brand recognition out there as well, and just to sort of plant their flag earlier than these other iBuyers, or is it because they really do believe that their systems and the data that they're collecting over there is also strong enough where they can make a profit in those markets as well? And also, because this must be a thing, are they much more profitable in Atlanta and Phoenix, and that's why they focus there? Like based on the data, they must know how to price those homes much better. Am I correct in saying that?
Yes, I think that's right. There are caveats to it, but markets that they're active, for longer, markets that they have more reps in, they can certainly price homes better,
Sure.
right?
Sure.
That just makes sense. I will say this goes back to what I said about pricing in risk and resale. Phoenix has never had the margins, or rarely has it ever had the margins of Atlanta, because Phoenix is a desert, right? Every home is very similar. It's a homogeneous supply relative to a place like Atlanta, where there's basements, there's hills, there's all these sort of unique idiosyncrasies about the homes. And so as a result, no one in Atlanta knows the price very well, let alone Opendoor, right? But in Phoenix, you ask any realtor, doesn't matter how many homes they've sold in the year. They're like, I've got a two bed, two bath in Phoenix right now, in this zip code, and it's 1,500 square feet. What would you price it? And they'll all say the same number. And so that's difficult for Opendoor, right? Because it means that they can't blow out the spread as wide, because everyone knows that it's much, it's actually worth a lot more than what that offer is.
Right.
Whereas in
Right.
places like Atlanta, where the supply is much more heterogeneous, it's easier for them to be like, hey, this is a range, take it or leave it. You can try your luck, that kind of thing. But anyways, yeah, margins are generally much higher in Atlanta. Like right now, yeah, there's over 1,000 basis point difference in margin between Phoenix and Atlanta.
So using what you're looking at right there, and and then we'll talk about it. The screen you're looking at, what is it telling you for the current Q2 that we're going into, that they're about to present? Is it looking positive for Opendoor? Obviously, the market seems to think that Opendoor is seeing a lot of great information. Is what you're seeing across the real estate market also pointing signs to that? Sorry, did I say Robinhood? I meant to say Opendoor. To what Opendoor is doing. Tell us what you're actually finding in your data, in terms of Opendoor's outlook here.
Yeah. So, I mean, I think one of the advantages of Datador is that there are so many people using it that it's almost mainstream at this point. Like if you're not using Datador and you're invested in Opendoor, you're really getting delayed information, right? Because most of the market,
Congratulations, by the way.
yeah, yeah, thanks. Most of the market is, if they're invested in Opendoor, is using uh, Datador, and so specifically hedge funds, institutional investors, for sure, that's one of our products. But then, I mean, we have hundreds of retail investors as well who are using our platform, and so I think if you look at like, for example, we released estimates for Opendoor's Q2, which is going to be announced August 3rd. We released estimates last month. Opendoor is up some 50% over that time period, and our institutional clients have known those numbers for at least 4 weeks before that, if not 2 months. And so, yes, I think the numbers are showing a much more positive picture for Opendoor. And I imagine, and maybe I'm certainly biased on this, but I imagine that our data and kind of sharing those data with people is helping the stock price, because it's positive.
So then let me point this the other way. Did your similar data during 2022 also maybe point in a negative direction?
For sure. Yeah. I remember saying in an analytics email to our hedge fund clients in October that I didn't think that embedded margin was going to go any lower. I felt like we had finally seen a reversal, and embedded margin is just the margin that Opendoor is listing homes at, right? So if they sold their homes at today's listed prices, what would the gross margin be? And so that's something that we really like as a forward indicator of gross margin for the company. And so I said in October that it was going to bottom out there, and it did. November 13th was the lowest week of margin for the company, of actual gross margin, and embedded margin had already come up to 5-6%, and it's just continued to rise from there. If you look at the correlation between embedded margin and Opendoor stock price, it's almost 1-for-1 since the summer of
Wow.
2022.
Wow. Okay. And that obviously, I don't want to ask about everything that you guys are seeing, because obviously I know you want people to check it out for themselves. But things are still looking positive on your end in terms of all the statistics that you guys are seeing at Datador.
Yeah. I think the thing that was really important for me to check some boxes about being positive on the company are that they're starting to increase volume again, specifically purchase volume. And so what I've seen is that since February, or since March, February was the low point of purchases for the company, and every month since they've purchased more homes. And so that's been really exciting to see, because even though Opendoor's gross margins have improved materially and their embedded margins continue to rise, all that's very positive. But no matter how high they go, it's unlikely that they will ever arrive at a profitable company at their current scale. They need to be bigger. They just do, right? There's too many fixed costs for this version to be the answer. And so seeing them start to gain more confidence, dial back the spreads a little bit to have more competitive prices and conversions is exciting, because it means that they're getting their swagger back a little bit, which I think
Yeah.
they really, really need.
So, do you talk on the stock ever too much, or mainly just company side? Because I'd be curious about your opinions on valuation right now. If you think this is a stock that you're still buying at these prices, and what, like, things like stock-based compensation or the newest management. I'd love to also hear your thoughts about those. But let's first talk about valuation. At this current price for Opendoor, is this still a screaming buy like it probably was back at, less than a dollar a share?
Uh, definitely not the same as as it was when it was less than $1 a share. I'll say this. I think when I first started writing about companies, I was much more interested in getting the stocks right. And since I only began focusing on Opendoor, I've really just been focused on getting the company right,
Yeah,
uh, which is a different axis, and different motivation. And so I don't know. I can tell you, I'm not buying or selling stocks right now. I own Opendoor. It's a stock that I haven't sold, and I don't intend to sell. I think it's worth a lot more, but that is not a recommendation or financial advice or anything like that. I just believe in the company, and I think it'd be really hard. It would be harder for me to be as interested in doing this job of working at Datador unless I had some skin in the game.
sure, sure. Um, okay, then this will be the last question, and it'll be a two-parter. What do you think about the newest change in CEO? How do you like the new management? And then also, if you could potentially give us some insights into what insiders are doing with their shares.
Hmm. So yeah, so the change is hard, because I really admired Eric Wu. I mean, what he's built is what I believe to be a future generational type of investment, type
Sure.
company, and they're solving something that's really, really, really hard. Uh, like I read something that Chamath Palihapitiya said today, and you can have whatever opinion you want. I know that the SPAC thing has been really frustrated for a lot of people, but he did bring public a lot of very innovative
He
companies,
brought me
and
my SoFi.
exactly. And what he said is something that I said a long time ago, where he was just talking about how there's this relationship between companies having 90+% gross margins and yet still being always unprofitable companies. Like, it makes no sense. How could you have 90, percentage points of gross profit and not be profitable? It's like, it doesn't make sense, but it happens all the time.
Yeah,
And one of the biggest issues that I see with that, especially as someone who has followed Opendoor, is if you have 90+ percentage points of gross profit, you're always going to be competing. So even though you're getting these crazy multiples, 10 years from now, you're not going to have 90+percentage points of gross profit. It's going to be 70, 60, right? Because so many competitors have swarmed to get a piece of this giant feast of margin.
yeah,
And so that's really important to understand. And like Peter Thiel said this as well, competition is for losers. Like, you don't want to be in a space where everyone can get funding to go after this big piece of a pie. Like, you want to do hard things. You want to do hard things that other people can't do. And they look at it and they say, oh, no, 10 percentage points of gross margin. I can't do that business. That business is way too hard. You're walking on a razor's edge. Like, that's not for me, because then you can actually get to scale faster. You can, you don't have to deal with as much competition. I think that's what's great about what Opendoor is, and why I've always been so bullish on the company, is because they're doing something that other people just can't do. They're doing it better than everyone who's ever tried it. And they've had ups and downs, but long term, I think they've got the best shot of solving this really, really difficult problem.
Hey, I think the fact that you're making me rethink everything. Like, the fact that they're an asset heavy company, which for the most part a lot of people will bash at, but then to compete you have to be a also very large company to even play a sizable role in this game. And Open Door, actually, that's potentially a part of their moat, is how much, or how
Yeah,
large and how small their margins are. Right? Is that you can't step in on this game.
yeah.
Wow.
See Zillow.
Yeah. Yeah. Fair enough. Tyler, I think that's a great, cut right there. I really do appreciate it. Why don't you tell everyone what you're working on, and where they can find it?
Yeah. So my name's Tyler Okland. You can find me on Twitter, Tyler underscore Okland, OKLAND_MD. Um, I'm also a physician. That's why I have that at the end of my name. You can also find us on datador.io, www.datador.io, and take a look. Yeah, happy to chat with you. DM me if you have any questions. Always love talking about Opendoor.
All his links are down in the description down below. Thank you guys so much for checking out this video. Thank you, Tyler, for joining me. But until next time, guys, bye for now.